What's up everyone? I hope everyone is doing well. Today we are going to do the monthly trade recap that I promised you from last month. Today we are going to talk about February. And February was quite strange, let's say it like that, because there was a lot of range bound price action and I only took a total of 6 trades, which it's very low. Like in January I took 21 trades, and in February, because price action was much more range bound, I understood from price action that I need to stay out of the market much more than I was staying before. As for percentage, I was able to finish this month off with 12.48% profit. This was from, again, 6 trades, and you will seriously understand what my favorite pair is on this trade recap, because I took a total of 5 trades on Aussie US dollar and 1 trade on Aussie Japanese yen. No trades on Euro dollar and no trades on Euro Japanese yen. If you've seen the previous trade recaps, you know I have a love-hate relationship with EJ, and so with corrective price action, I know that's something that I want to stay out. So let's skip the chit chat once again. Let's jump into the charts and let's see how I made 12.48% profit in the month of February. Okay, so just before we get started into the trades, I'm just going to run through EU's price action because there was an opportunity to enter in a trade right here, and I want to explain why I did not enter. So the trade was right here at 5.7, so 2 pips above, that's 7.7. And I know that some of you entered with a 12 pip stop and you were able to absolutely smash 14% out of this trade. But if we look back, what is there going for this trade? Well, what's going for this trade is the fact that we had this descending channel right here, and then what starts is a beautiful uptrend. Impulse up, pause, impulse up, pause, impulse up, pause, impulse up, you know? And this was after this solid impulse up. You're looking for a trade down here, but because I don't like these trades that need to pull back and it's just range bound, I think it's, for myself, it's more likely that this continues moving corrective than to actually retrace out of this zone. So that's why I did not take this trade. And then what you can expect is that when we have very solid impulsive price action, I expect always a little bit of a more range bound price action, and that's exactly what we had. And after this range bound price action, what did we have? Boom, 3 huge, 3, 4, 5 more, so very volatile price action right here. And what am I expecting after? More range bound price action. But we did wick this high, grabbing the liquidity that was laying above there, impulse down, retrace, impulse down, and then we had this very quick flag right here. And I know that some of you entered here. I personally didn't, simply because this was way too quick of a flag for such messy price action. If I would have seen something more like this, then move up and retrace, then I would take it. But since this was very, very quick, I decided not to take it. And so you could have banked like, I think 2% there, so or 4, something like that. And yeah, all the rest you see, it's just range bound price action overall. Nothing really for myself. Here you have this huge gap, and then it's March. EJ, as I've told you in the previous one, I have a love-hate relationship with EJ, and if EJ is not showing me beautiful price action, then I'm not entering. And so what happened is range bound price action, very impulsive, range bound, impulsive, momentum down, no entries right here, and I would also not take any entries right there. And then this is just range bound price action in my opinion. So there was nothing here on EJ for myself to take. So, you know, I have a love-hate relationship with EJ. It was not showing me great price action. I didn't enter. So let's go on to AU and AJ, which is what matters. So AU is definitely my favorite pair. This was the pair that I took the most amount of trades in, and it's always been the pair that gives me the most amount of percentage. And you'll see that many of these trades are very, very similar to each other. So right here, what do we have? We have an uptrend right here. We have an uptrend, and then, but we keep losing momentum. So we break the high, we retrace, and then this prints an inside bar, and it just breaks the high and gives us an extremely solid impulsive candle down. Not to forget that we were kind of in this zone where we could expect a little bit of a high probability of the price moving down, and we tap into that zone, and what happens is we have a very strong candle down. This gave me in Aussie US dollar the confidence to set the trade and just let it run. What happens? This happens where I've told you already, if you watch the live streams or something, that these are my favorite trades to enter in, where they just tap you in the first maybe 15 minutes of the trade and it keeps going. I've had many high percentage trades like this, and that's why like my bias is towards those type of trades. And then we just keep ranging and we pull back into the entry, and I had not removed anything from here, because this is the thing of when you enter in a quick trade, is that you need to be able to handle the emotions basically of the trade still pulling back. Because let's say that the other members of Gorilla were not looking at this trade right here yet, they wanted to see a little bit of more confirmation. This is still something that happens a lot in the backtesting, and that's exactly what happened, and I was happy to let it pull back and see if it keeps moving in my direction, to also give opportunity to other people. Then we print this inside bar and we start moving down. Right here, this is basically midnight, so my bot manages this trade, my management EA manages this trade by putting it 2 pips below this high right here. So this is 5. Locking in 0.49% profit. Then we just start ranging around a little bit, and this starts printing maybe a possible combo right here. And I think this is when I got way too greedy, because I was like, yeah, this is most probably going to move down. And so I entered in this next, let's say, very valid trade. The reason it was a very valid trade, so I mean it was not high probability, is because we broke this low. Retrace. We just broke this low and retraced again. This shows that there's no momentum to move down, and we want to enter when the momentum is there. So in this case, it would have been if something like this would have happened. This is a high probability trade. This is a very valid, calling it possibly low valid trade. I ended up taking it. I got tagged in. It broke the low right here, and I was able to reduce the risk here and lock in profits right there. So I was running 0.94% there, locked in, and this trade then ended up taking me out for a minus 0.3%. So it was a net basically 0.5% win, which is good. But I could have avoided this entry right here, but it's fine, because if it would have impulsed down, I would be like, oh, this is a genius entry, but not really. What happens after is that we do start impulsing down quite a little bit, showing momentum, but this momentum is yet again negated, and we start moving up. And this is when we have to understand kind of pair characteristics, which is the fact that AU, after corrective price action, it likes to move ascendingly. But even when it's moving ascendingly, AU likes to respect the trend of the high and the low. And because of that, I wanted to see a little bit more, because I know that some people entered in this trade right here, but I wanted to see a little bit more. And so what happened is we had this counter trend move right here, and then we continued impulsing up. We see very solid candles up. And because of that, I was like, okay, momentum is still long. I'm expecting AU to do something like this, and so I'm setting this trade to then continue managing with this short-term trend. And what happened, so we got tagged in, it starts moving up, we reduce the risk, which is something absolutely great. We reduce the risk very quickly, and then it gives us another counter trend move, breaks the high, and I just lock in profits right there. This was at midnight, so once again my bot locked in profits right here, which was 0.8% profit, and then we got tagged out. So basically in these 3 trades we got a net of like 1.3%, which is great. But then this is when the market started giving us a lot of volatility, and this was possibly one problem that I had, which was I wasn't able to identify it quick enough, which made me take this loss. Which, by the way, I don't think it is a horrible loss. A lot of it was based on probabilities. But I needed to understand, look at this price action and be like, this is not clean price action. We are breaking the lows retracing, and then we are breaking the highs retracing. Like, very volatile price action, very range bound price action. And what happens, the reason I entered here is because we had this candle right here, which made sure that if we enter right here, it's a combo, which means that it has a higher probability of happening because it introduces both of my setups together. What happened, I just get completely wicked through. Nothing happens, no reaction out of this zone. It was just a very quick 1% loss, and it continued with the range bound price action. But this was when I decided that I should take a step back from the market because the market is getting quite volatile and messy. And that's why I took afterwards 1 week to take the next trade. And this next trade was this one right here, and in this day I even filmed it in the day in the life, so if you want to check it out, make sure to check it on my channel and in the top right corner if I remember to put it there. But I went through this price action a lot in that day in the life video, and basically what I said is that we have this nice zone right here, and I wanted to see this zone getting wicked through. So then we grab the liquidity that lays above here, and then we start impulsing down. And that's exactly what the market did. So if we move, if we just go back a little bit, you can see that we had this very, very solid move up, and then we had one very solid candle, boom, another very solid candle. This to me was like, yes, this is a no-brainer. This was exactly what I was forecasting, and this is when I enter. This is when I make the big percentages. It's in these type of trades because what's the risk? The risk is 1%. But the possible reward is this going to test like even these lows, it would be a 11% trade. If it comes to test these lows, it's an 18% trade. So it's absolutely great. And for the 1% risk, I'm more than happy to take these type of trades. Then we had this wick, which I know turned a lot of people off, but because it had just so much going for it, I decided to keep the trade on. What happens? We get tapped in. After 3 hours, I'm already reducing my risk to like 0.2, which is absolutely great. And then this just started impulsing. I didn't look at any further scale-ins really, even though I should have. That was my mistake. I was way too blindsided by this trade going that I didn't see possible scale-ins. And one of them was right here. Very quick scaling right here, which you could have entered. It would have resulted in a little bit of a loss, but that's perfectly fine because like this trade was running, and if this would have just done this, like again, the risk reward is absolutely amazing here because the momentum is there in the market. So ascending channel right here, bigger loss in momentum overall. Impulse down, we get tagged in, and it starts impulsing down. I lock profits in at 74 pips, which is 4.98%, and I got tapped out right here because it was approaching spread hours and so on. So spreads get a little bit bigger right here already, so I got tagged out there. So overall, very happy with this trade. Okay, last but not least on Aussie Japanese yen. Aussie Japanese yen behaved very similarly to as EJ, but then it had this beautiful rejection out of this zone right here. And by the way, I don't look all that much into zones. It's just something that I use as a confluence sometimes to add probability onto my trades, not to avoid taking a trade or something. It's just to add probability. And in the day in the life, make sure to check it out. I talked about this zone right here and me wanting for this to break this high, wick this zone, and then start moving down. I didn't even notice this zone in the day in the life, but if you look back, like it moves up, takes all the liquidity that is in here, taps this zone right here, and gives us a solid impulse down, just like Aussie US dollar gave. Loss in momentum right here, move up. As soon as we break the high, very solid engulfing candle, continues impulsing down very solidly, and then it just taps me in and it starts going. This one, in the next hour after the entry, I already had locked in profits, no, reduced my risk, so that's absolutely great. And then this trade throughout the night kept going, which, well, it's unfortunate what made me this percentage, and my heart goes to everyone that is out there, because that's the only thing that I can do. And yeah, like, then this broke the low right here and then wicked me out right there for a total of 7.11% profit. So basically, recapping the whole thing, Aussie Japanese yen ascending channel, impulse down, retrace, gives me 7.11% profit. And then Aussie Japanese yen, 4.98% profit in one trade, and a net of 0.3% in these four trades. So you can clearly see that most of your percentages are always going to come from a low amount of trades. So that was basically it. I hope you were able to take some value from this and see how I'm currently trading. You can check the link in the description, the first link in the description. It will give you 10% off for the strategy that I'm currently using. It's not me that is teaching it, it's my mentor, and it's currently in the description, top of the description, so make sure to check it out. I hope you guys enjoyed the video and took some value from it. Let me know if you have any questions in the comment section below. I read every comment and I answer to every comment. So I hope you guys enjoyed. Let me know that you are still here by posting this emoji right here, and I will be checking the comments once again, and I will see you next week. Peace.